Morning everybody, it's Chris from Serene Education with the 4 majors notes update for the 4th of July 2012. Okay, let's have a look at the euro against US dollar to start with, and let's have a look at the progress weekly. How's that candle looking on that weekly progress? Hey, it's still looking bearish, still pulling back, and that pullback is coming at the underside of that 1265, that prior support and resistance level, that major support and resistance level. You can see here, if I just make it nice and big, there we go. Okay, so noticeable resistance at this area, a lot of consolidation, a lot of indecisiveness at the underside of this prior support. Could this be a new resistance? Let's wait and see what's happening. The overall trend is still negative. You can still see swing lows to the downside, and most importantly, the institution moving average is still above price, but our CTC strategy, red arrow, red candles, and the bars on either side are red, so things are still looking negative. Sentiment is still negative for this pair, and overall we should be looking for shorting opportunities. So the daily 1265, must plot that, got to put that in. So draw a horizontal line on your chart and make that 1265. There we go, nice and strong. And you can see this is a daily now, guys, how long price has been actually trading on the underside of this major prior support. Okay, had a couple days above price, but however indecisive news, or not indecisive movement. We wanted to see a nice bullish candle above this after this doji here, or spinning top, apologies. We had a breakout spinning top, so we wanted a confirmation signal, and the confirmation signal wasn't bullish, and hence the reason why the CTC at the other side did not turn blue, and price reverted to the downside, forming this nice little evening star resistance level, an upside trend on the underside, and price reverted to the downside. Friday, nice bullish engulfing candle. There again, failed to break and close higher on Monday, and Tuesday yesterday, very indecisive. Another spinning top at the underside of 1265, so another indecision candle. So we want a decision. There are a lot of indecision candles in and around this area, 1265 price support and resistance. So we want decisiveness. We could see price revert to the downside. The more resistance it finds here, eventually the price is just going to revert to the downside. So it's imperative. If this is to be a genuine attempt to break this 1265 prior support, break this prior support and resistance level, then price needs to get above it as soon as possible and close well away from that 1265 mark. Failure to do so would ultimately see price consolidating, with the outlook long term for bearishness still to be the main factor. Here's our 4-hour chart. You can quite clearly see now price is spending a bit more time above the institution moving average, where beforehand it was trading below. Notice the CTC, however, is red across the board, but we're consolidating, we're just trading sideways. Okay, very, very indecisive. Okay, but the most important thing, the institution moving average on our 4-hour is below price. So the longer it maintains above the 1255, the more likely is we're going to see to this 1265 being attempted. Okay, so it's important that we see that. You can see quite clearly recently we are seeing a lot of consolidativeness on the 4-hour at the underside. So you can see that particularly right now there's nothing ready to trade. Ideally, if we were going to trade this, then we would like to see price trading below the institution moving average, which is below this prior strong support area here. So we want to see price trading at well below the 1255.50. Okay, so make a note of that. Get below 1255.50, then we're definitely looking for price to head back towards these levels here, roughly around the 1245, the 12400 mark. We've been there before we tackled the all-time low here at 12300. The 12300 mark. Okay, so we have two genuine targets here, if and when price closes lower than the 1255, because as long as it maintains above the institution, then it's still positive. Okay, it's consolidating at the underside of 1265. It's positive. Okay, so it's got to get below that, because then it starts that sentiment is genuinely negative. Okay, so make aware of that, because on our 4-hour chart you can see here the institution on the hourly, the institution moving average is still above that institution moving average. Okay, price is still trading above it, and as I mentioned, we do need to see price breaking lower than that. So getting well below that 1255 would give us a true signal for a shorting opportunity for the remainder of our intraday. And as you can see quite clearly here, nice bottom here at 1242 before we see a reattempt all the way down to 12300 is our second target. So as long as it remains below 1265, ultimately we should be looking for shorting opportunities. Okay, so there we go. You can see I'm using my my daily analysis to work out what my targets are likely to be intraday if and when these areas are broken. Okay, major support and resistance above me. That's the major resealing level. You can see at the moment now on my hourly, price is falling, lower swings depicting downside. Swing low, swing low, swing low. Consolidating, however, over the past couple of days. A lot of support through here. Okay, it does need to get below that, but get below that as well as the institution moving average, and then we're talking for, then we're seeing further sentiment to the downside. Otherwise, we could see price shorting into this little consolidated support chart before we see price reattempting the 1265. Onto sterling. Let's have a look at the weekly. Here again, a lot of consolidation under here. You can see price not really moving higher than this 1575 mark. There seems to be a lot of resistance here, a lot of ceiling resistance from 15700 and 157,500. A lot of ceiling resistance, and that pretty much factors in or comes into play because we have both the 20, the 50, the institution, and the 50 all above us. A lot of resistance above us, guys. We've seen a lot of negativity through the May session right through to June, and then we had that balance on that 15,300 major support and resistance level that goes back a number of years. And then we had a nice juicy bounce to the upside, and in doing so we've pulled back to areas of price support and resistance or fib retracement areas, 23.6 and 38, but we come unstuck at the 50 and prices reverted to the downside. However, recently you can see at the start of this week price is finding a bit of support now at the 38.2 here, just above the 1565. So if we go to our daily, make a note of that, 1565. So 50, apologies guys, let's go, yeah, just zoom out, take my high in May to the low here just before the start of June. There we go, 38.2. 38.2 price, 2 days, 2 consecutive days of indecision, okay, after a decisive up candle. But that indecisiveness comes at the underside of an institution moving average. I mentioned between the 15700 and 1575 major resistance. Okay, so if you really wanted to see something, you could actually literally cap this, box this whole area here between 15700 and 800. That's a whole 100 pips. Give that to the market because it's clearly an area of major resistance above us. Look at that. We have the institution plus the 50 plus a fib retracement, which is the 50% pullback area. There's a lot of resistance here. There's a lot of consolidation here, and if price is to be still positively moving higher, we do need to see that being breached quite soon. Failure to do so would see price ultimately falling back low again, and if price closes lower than this 38.2 here at the 1565, then ultimately we should be targeting that 23.6 fib retracement area here at 15,500. CTC on our daily is still looking negative, guys. Even though we've pulled back, we're still below the institution moving average, and hence the reason why the CTC is still telling us it's negative sentiment. And as long as we find resistance here at 1575 or 15800, then ultimately price is gonna fall away. So make a note of that. Intraday, 4 hour, the 800, 75, 700. You can see that area there. Clear resistance. If I zoom out, clear consolidation. Look at that through April, latter part of May. On this is a 4 hour chart through here through mid-June, and now early start of July. We're seeing a lot of resistance now. Okay, at 15700 fails to get above that and longer consolidates at the underside of that. Ultimately, price is just going to give up and fall lower. The only thing we should be aware of is the fact that for the first time, the institution moving average has been breached since the 15th of May. Price is now trading on the upper side of that, and on our hourly, on our hourly, we'll probably find that price is also doing exactly the same, trading above the institution, which is a good sign. As long as it's trading above the institution, then intraday price should be looking for more positive upside movement. Okay, so reattempts of the 15700 is trying quite. It's trying quite a lot to try and stay positive, upside positive. But as long as it finds resistance here, it's ultimately going to fall away. It does need to get above this as soon as possible. Is there anything out this week that could actually give us an indication. Well, we've got non-farm payroll. We have interest rates announcements tomorrow, if I'm not mistaken. Today's a US bank holiday. It's the 4th of July. So bank holiday in the States. Not much going to be happening, but I assure you, particularly for sterling, we might see an interest rate change tomorrow from the Bank of England. Merv King and his sidekicks could be pushing or lowering that interest rate. IMF has been requesting that the Bank of England do that for the good of the Eurozone. But then we also have non-farm payroll figures coming out on Friday. Unemployment figures on Thursday to start with, but non-farm payroll figures on Friday. So there's a lot of news that will be coming in from Thursday, Friday, that could move the market. So henceforth, if we find more resistance here, then ultimately the actual movement on the market on Friday could actually trigger something. Swiss franc. Okay, here again, Swiss franc. We know the 960 major support and resistance level recently, and you can see how price has been tackling that area over the past couple of weeks. And if I just zoom out of my daily, you can quite clearly see a good resistance area here going into January of this year. Had a breakout recently through the latter part of May, however, failed to actually build on that once it broke above it. We're looking for a nice bounce here, a support bounce. That failed materialized. We've got a bearish engulfing, and it told us that sentiment wasn't really looking for any further highs, and price reverted to the downside. In doing so, finding support or reverting to prior fib retracement areas to 23.6, which happened to be the 960, the 38.2, which happened to be just below that. A reattempt of the 50% once it broke through. You can see a negative sentiment before that breakout. However, since then, reattempting the 960, but this bearish engulfing candle over here that we saw on Friday last week, really taking away all this indecision. Very, very not a true breakout, a breakout with no real momentum, and the bearish candle pretty much told us that that breakout was null and void. So doing so, taking us back below the 960, and in doing so, taking us back below this major support and resistance level. So as long as it's trading below this resistance, and ultimately we should be looking for bearish or bullish consolidativeness, because it's still in a bull run, because the institution moving is still down here. But if we see price getting below this 950, then we should be targeting that 940, 61.8 here at 932 and change, and then the 78.6 retracement area, which will take us back towards this 9200 mark, which coincides with the institution moving average. Indecision candle yesterday on the daily. We've got to see a decisive candle. This bearish candle over here is that confirming to us that the sentiment overall is still looking negative. And if that's so, we should still see 960 being or you can see over here, for example, two prior days, the 20 period moving average acting as seeding level. That confirms it. Then we should see sentiment dragging it lower, and ideally through the 950, and a close here would definitely tell us to look for further downside for the foreseeable future. And the 4 hour can tell us that, because you can see the institution beforehand, price is trading above it, but recently it failed. Break above the 960 has seen price now trading below that the institution moving average, which is a negative signal. So as long as it trades below that institution moving average, then ultimately we should be looking for negative sentiment. And if it fails again here at 950, then we should start seeing the CTC strategy start to work in our favor. You can see quite clearly our consolidation above this 950, and as long as it trades above that, then ultimately we could see consolidation. But what we want to see, though, is we want to see red arrow, the red candles, and ideally the CTC on the other side going red. But I don't feel we'll get that anytime soon until we're actually trading below that 9500 mark. Okay, now get below 9500, then we should be targeting 940, targeting 61.8 here at 932, and ultimately down to 920, which is down here, which is a major support and resistance level at our 78. Okay, as our long-term target. So if we look at that on our hourly, you can see the institution still above price. So intraday resistance still key here. You can see here between 9500, 956, major resistance. Okay, the past couple of days, seeding level above this, and as long as it maintains, then ultimately we should start seeing price being squeezed between these 2 points. Swing high, swing high, swing high, and our intraday time frames. Ultimately, followed by potentially a breakout either up or down. That's what we're looking for. We're looking for a confirmation signal on an hourly time frame. You can see it's been squeezed now between 2 points on our hourly chart, and if we do get that squeeze and it happens to be down, then we should be targeting those areas to the downside, as I mentioned. So always make a 950 would be our first target, 940 would be our second target. So the 950, it's quite close. 940, there we go. So some decent moves to the downside, and below 940 is the 920, as I mentioned. Last bit of the day is US dollar Japanese yen. Let's have a look at the weekly and see how she's progressing. Very indecisive. Still trading in a very tight range, and pretty much looking indecisive in terms of a doji candlestick pattern. The open and close are pretty much smack bang with each other, and all that's taking place in and around the 80 mark, and 80 being a price support and resistance, a major support and resistance level in the past. Price is trading below that at present, and as long as she trades below that, ultimately we should be looking for bearish sentiment to take price action. And you can see quite clearly here on the 80 prior support and resistance through March, April, May, June, July of 2010 and 11. And you can see recently we had a nice breakout in February onwards. However, prices since then been pulling back, and in doing so it's broke below the 80 and is now trading below the 80, spending more time below 80. And guess the histogram on our weekly is still looking very negative. Institution moving into well above price, so really negative. But you'll see our 20 and 50 are pretty much together, close, and hence the reason why we've had this consolidativeness at the still on the underside. And as long as it maintains on the underside of price support and resistance, it is negative. Okay, so our daily, put your 80 in because it's a major support and resistance level. Always got to put your major support and resistance levels in, because that will tell you if price is trading in conjunction to these areas. So you're looking for any intraday trading. If you're looking for a long here, for whatever reason, you'd be nuts to do that because you're trading too close to a major resistance level. But you'll see 1, 2, 3, 4, 5, 6 days, very small trading range. Hence the reason on a weekly it looks like a doji. It's very small, a lot of wicks. If you put all these bodies together, you have a long wick on either side and a very small body on the inside. Hence the reason why we have that doji candle on our weekly chart. Remember, as long as we're trading above the institution, however, price could remain positive, and you can see that swings highs at the underside. After this breakout, we are seeing price hugging the underside like Euro US dollar is doing at the moment. It's broken lower, but it's pulled back since and hugging the underside of a major support and resistance level. If this is to be true bullish sentiment, then 80 needs to be broken soon as possible. The longer it takes, the more likely the price is going to give up and revert to the downside. Notice the CTC on either side is still red, so this pullback is still negative consolidation. That's what it is. Okay, it's just consolidating in a negative downtrend. So this is, if you were shorting here, this could potentially just be profit taking. Okay, so as long as it remains below 80, then ultimately the long-term sentiment for this pair is still looking negative. Okay, because we have to get above 80 in order to start seeing the CTC on the other side going blue, because all your moving averages will be below price, acting as support, and hence pushing her higher. Positiveness. But the only thing in our way at the moment now is this major support and resistance level here at 80. As long as she's above price, then she might very well act as a resistance, and we've seen what price has done when she's traded close to this number. Okay, so in your intraday charts, make a note of that the 80 is a major support and resistance level, and make notes of it. You can see our 23.6, 38.2, these are all retracements on our daily. The 50% retracement area of this upside move on our daily chart coincides with the 80. Okay, so got to get below the 61.8 to see any further shorting opportunities, which will take us down to at least a 78.6, which happens to be where price bounced recently at the early part of June, which started this whole upside move. Get below that 78.6, then we're targeting these lows here at 7600. Okay, so your intraday, you're only looking for a break above 80. Here we go. Oops, if we can draw that correctly, it'll be great. Let me just move this here to 80. There's one at 79, okay, which is our 61.8. And I know the other one is our 78, which is the 78.6 fib. So got to get above that to see any further extensions to the upside. Failure and resistance followed by a nice bearish engulfing at the underside of this area here would likely see us retargeting 79, which would be our first target, and then 78, which is our second target, if and when price closes below these areas. Okay, you can see quite clearly on our hourly chart, price now being squeezed. A low, followed by a swing high, swing high, swing high, swing high. You can see the major area here at 80. Let me just do that nice and dark. Our major support resistance on our daily, and our intraday swing moving higher. Now making price, it's forcing price into the squeeze pattern, and the closer it's got to the squeeze and the closer these two lines get together, you can see price is getting really trapped within this. You can see a lot of movement here freely, and then oh my goodness, it's getting a lot tighter now. We're going to see some action sooner or later. It's either going to break to the upside or break to the downside with momentum, and that's what we're looking for. We're looking for a nice genuine confirmation signal, which will be that momentum candle. Yes, we might lose a bit of lose a profit to start with, but it'll be a candle that will dictate the overall market sentiment for the foreseeable future. Okay, at the moment now there seems to be more resistance above us, so we could see ultimately a bearish engulfing candle, or we could surprise us all and get a bullish engulfing. Okay, hence the reason why we need to be patient. There's a lot of news out this week, and if you aren't in any trades, then it's far better just to stand aside and wait for a confirmation signal. Other than that, that's it for today, guys. There is a bank holiday in the States. It's the 4th of July, so it's a big one for the Americans. So in terms of trading sentiment-wise this afternoon, or trading volume out there, it's going to be quite null and void this afternoon. So we could see a bit of a quiet period. But then it leads up until Thursday. Tomorrow we have all the interest rates around announcements for Eurozone, as well as the United Kingdom's interest rates announcements. And then we go into the end of Thursday. We have the unemployment the unemployment claims before we get the big one, which is the first Friday of the new month, which means we have non-farm payroll figures, which is a very important piece of news. So a lot of indecisiveness this week, primarily because we're going into a major end of week session with a lot of news. Okay, so if you're not trading, rather stand aside and then wait for Thursday and Friday so we get those confirmation signals that we're looking for. Okay, have a fantastic trading day. Keep it simple. Make sure you follow the rules as I mentioned each day. It's imperative, guys. I'll keep saying it until I drum it into you. Got to back it up with sound money management. Got to have it's not worth anything if you have a fantastic trading template, but if you don't back it up with any money management, it's worth nothing. Okay? Enjoy yourselves. Any questions, you know where to find me and Nikki. And I'll see you first thing tomorrow morning. Until then, trade serenely.